second. So good morning, everyone. On behalf of TPA Benchmark and Hynes Associates, a hearty welcome to you all, and thank you so much for joining us this morning. We have a power-packed agenda prepared for you, and we have very, very distinguished guests. We have Peragine joining us as our featured advisor of the month. Bill is Senior Vice President of Hub International and a top 100 advisor. Bill, thank you so much for joining us this morning. We have a great many advisors who are very much looking forward to hearing from you today. Special welcome also to the Honorable Bradford Campbell. Brad, Shane is going to do an appropriate introduction for you, but we're very much looking forward to your insights on various fiduciary issues this morning.
Happy to be here.
Thank you. We have about a dozen others on our panel. However, we will introduce them as we move through the agenda. We want to go ahead and begin. And for those of you that are first-time attendees, I just want to tell you very briefly who we are here at tpabenchmark.com. We are a national network of high-quality advisors all across the country that are advisor-friendly and very focused on partnering with advisors such as yourself to help you grow your retirement plan business. You're going to meet some of our third-party administrators this morning. And for those of you that are joining us this morning, we have a YouTube channel. Today's session will be recorded on YouTube. I know we have a great many attendees from the Northeast this morning who may have been impacted by Tropical Storm Isaias. So we have made arrangements for you all to get credit in viewing the recording on YouTube if you're not able to join us due to logistical reasons this morning. So we invite you to be with us. We meet regularly the first Wednesday of every month at 11 a.m. We feature a top 100 advisor each month to provide you with best practices, and we give you the opportunity to sharpen your retirement plan skills with a variety of investment management insights, plan design insights, and most of all, selling and prospecting insights. I want to remind you that we are an approved provider for FI 360. Everyone in attendance for the full 75 minutes today will receive 1.5 CE credits from FI 360. We are also proud partners of the American Retirement Association. And we are pleased to be providing 1.5 CE credits from ASPA today. Jake Linney from Washington, D.C., are you with us?
Hi, Dawn. Good morning, everybody.
Good morning, Jake. Thank you on behalf of TPA Benchmark for providing NAPA credit for today's session. Jake, just before we launch into the agenda, for the advisors on the call and those that will be viewing us on YouTube, could you just give us a sense of the resources that ASPA and NAPA make available to advisors?
Yeah, so thank you very much. The National Association of Plan Advisors, NAPA, is a sister organization of the American Retirement Association and focuses on both the education and issues for retirement plan advisors. So on our website, we have a special page dedicated to coronavirus right now that carries all of the regulation and also has over 20 articles of practice pointers for you as advisors and over 60 articles as plan sponsor resources for your clients. So please come and check out our website. We also have a variety of education programs from beginning 401k practice building to our CPFA designation, which really teaches you how to be a fiduciary and consult with the fiduciaries of the plan. So Dawn, thank you again for having us, and really looking forward to the event.
Thank you, Jake. And just for your reference, we will be submitting all names to FI 360 and to Jake on behalf of ASPA. And again, for those folks that had power issues, we are making arrangements for you to obtain credit in viewing today's webinar. So we have 4 segments to progress through. So Shane Dawe from American Century. Shane is Vice President at American Century. And we're pleased to be partnering with Shane. Shane, I'm going to turn it over to you, and I'm going to let you introduce to our first panel, which is best practices in differentiating your advisor services in trying times. Shane, take it away.
All right, Dawn, thank you very much. And good morning to everybody. Thanks for joining. And sorry I can't be on video, but I'm one of those here in Connecticut struggling. But we are excited to introduce the two panelists. But again, just further background for me. Again, I'm DCIO for American Century. I cover all of New York. Hopefully I've had the opportunity to meet with you or speak with you. If not, I look forward to that in the near future. I do have the honor of facilitating this panel discussion, which, as Dawn said, is around differentiating your services in trying times, which we definitely are in. But before I do introduce the two panels, a little bit more about the topic. So the way I think about this, there's lots of ways to separate yourself as an advisor and your services from what I like to call the sea of sameness. And unfortunately, whether you're DCIO, whether you're platform, TPA, advisor, doesn't matter. We oftentimes fall in this, what I like to call the sea of sameness. And there is nothing greater right now to help you get out of that sea than to truly differentiate yourself by aligning yourself and your practice to what matters most to your prospect and your existing clients. We don't want to forget about them. So it matters to both, and now is the time to really highlight that. You could also call this dimensionalizing yourself. So this is no longer just around the 3 F's, fees, funds, fiduciaries. You probably have heard that 100 times. Though those are critical, I hear from advisors all the time, having done this for over 20 years, previously with Prudential Retirement on the platform side. And I'd always hear from advisors, why can't I move the ball forward? Why haven't they made a decision? And I hate to break it to you, it's because you all sound the same. You're all offering the same ideas, suggestions, fund changes, fee reductions, fiduciary support. How do you take it up another notch? Now's the time to do that. So I'd like to introduce Bill Peragine. Bill's been in the industry for over 27 years. He's out of Long Island, also has an office in Manhattan as well now. He's a nationally recognized leader, definitely has won multiple Plan Advisor awards. He joined Hub International at the end of last year, really in an effort to expand his business and drive growth, which I think he's already doing. He's going to talk more about a recent success and how what I've just talked about is exactly what helped him get that win. I also have the pleasure of introducing the Honorable Brad Campbell. Not only is he one of our country's top ERISA attorneys, but he's also a former Assistant Secretary of Labor to the Employee Benefits and head of the Employee Benefits Security Administration. So we're pleased to have both these gentlemen on the panel today. Brad's going to actually share his perspective and how truly getting to know what matters most to your clients is not only a cool thing, it's a nice thing, it dimensionalizes you and maybe a best practice, but it's also something that's very important to do as a fiduciary. So Bill, I'm going to turn it over to you first and let you take it away.
Great, thank you, Shane, and thank you, Dawn, for coordinating this. This is fantastic. We really appreciate it. I'm calling you from Great Long Island, Strong Island. We were fortunate not to be hit too bad by the storm yesterday, although the surrounding neighborhoods were hit. As Shane said, I head retirement and private wealth at Hub. I joined Hub International last year. Hub is one of the 4th largest consulting firms in the world, insurance firms in the world. Recently, and when I say recently, in the last 2 years, have really made a strong effort in trying to expand into the retirement space, because a lot of the producers here at Hub are talking to the same people we talk to, which are the decision makers, the CFOs, the HR people, and they're talking to them about things like health and welfare and property casualty. So it made a tremendous amount of sense for Hub to expand their business into the retirement space. And Shane had asked me to speak a little bit about our success and our team. So, and what we do. We focus predominantly on retirement plans, corporate retirement plans for our clients. And we had a recent success with a very, very large national medical practice. And they have a large 401k, profit sharing plan, cash balance plan. And they'd come to us and said, Bill, we want you to build the menu for us. And so our natural knee-jerk reaction was to focus on fees, fiduciary, which is what most advisors do, and funds. But what we do, which I think differentiates our practice, is we really try to get to know the client. And, you know, people talk about know your client, and we're talking about that for 30 years, as long as I've been in the industry. But it's so important to understand the culture of the client, who they are, what they do, who the fiduciaries are, and what they're thinking about when we build a menu. And so when you start to delve into that, before you start getting into doing the normal analysis and building the menu, is where you really kind of start to discover what funds or fund families or firms would be a really nice fit for the client. So it's all of us that have been doing this for a long time can very easily do some benchmarking and come out with a great fund lineup. But the other thing we're focused on is the target date funds. We knew that the majority of the money, at least 60% of the money, was going to land in the target date funds. And there's hundreds of millions of dollars in this plan. We knew it was going to land there. So we knew how important it was to have a really good cultural fit there. And again, there are a ton of tools out there, right, for picking target date funds. But as all of us know, that no two target date funds are the same. They all walk and talk differently. There's to and through, active and passive, strategic and tactical. There's all sorts of things to look at when you're looking at target date funds. But we really delved into, and we thought it was really important because of what this client did, which is heavily involved in medicine and oncology, was to include American Century as one of the possible solutions for the client. And the reason we wanted to include them was because of their commitment to investing with a cause. And so I don't work at American Century. Shane would be better able to give you the commercial for them, but they've made a commitment to giving back dollars towards research in medicine from their revenue. And their original owners, Jim and Virginia Stowers, also made a very large commitment to starting the Stowers Research Clinic. So we thought it was really important that we had them in the mix. But of course, we didn't want to just put them in the mix for that reason. We wanted to make sure that in addition to that making sense from a philosophical standpoint, that it also made sense from a performance standpoint. So we interviewed the fiduciaries and we asked them, what's really important to you when it comes to choosing a target date fund? And the overwhelming answer to that question was they felt that the majority of people that would migrate there may not be as sophisticated as some of the physicians, right? And that was one. And the other is downside protection. They really wanted us to focus on our analysis is on doing downside protection. And not just who had the best performance, who was, and who has most weighting in equities at retirement. They really wanted us to focus on that. So after interviewing the fiduciaries, we included some downside deviation, downside protection. We looked at past markets and bad markets, and we compared them to some of the top target date families out there. You all know them. And this all happened at the end of last year. And then we redid the analysis for the committee in April, which was really interesting because it was right after the pandemic. So now we had real information. We had a market that had gotten slammed. So we had real-time analysis we could do and say, hey, look at this. We have an event that just took place, and how did they fare? And how do all of these target date families that we looked at fare in this pandemic? And the good thing for Shane and for American Century was that American Century did exactly what they said they were going to do, which was they performed stellar in this poor time. And prior to the pandemic, we had the conversation, and it was like, oh, you remember in 2008, you remember in, we were kind of going back to different periods of time when the market did bad, and it's, we all have very short memory when it comes to the market, especially up until through the end of the year, because we were living in euphoric times with this market, and so whoever had the heaviest weightings and equities did look the best in the target date funds. But once we had this event, it really confirmed for the committee that that was the best choice. And then to marry that with their philosophy of investing with a cause and giving back to medical research made so much sense for the client. So we've learned through the process, the really most important thing was, before you start doing benchmarks and tools and looking at and talking to all the wholesalers out there, the great wholesalers, Liam Grubbs and Sheinwald and everybody, and about their funds, is to really get to know your client, right? And Brad will confirm that that is best practices when it comes to anything you do when it comes to investing, is to know your client. But we did a really deep dive, and the end result was that they selected American Century, and so we had a tremendous amount of a great success story. We're so happy with the decision, and that's it.
Yeah,
that's kind of where we went.
Awesome, thank you. And by no means, don't mean for it to be a commercial for American Century, but it did make a lot of sense. And the part that he's not telling you, because he's modest, and the rule is you can't brag about yourself, but somebody else can brag for you. So I'm going to do that right now. What this did for Bill was completely solidified his relationship with this client, not just as an advisor, but as a true partner. And here's why. The introduction to American Century, forget about target dates for a second. That filled one void. Here was a bigger void. This company that he's alluding to is in the oncology field, and the Stowers Institute for Medical Research is in search of a cure for cancer. As I think people know, we 42% of what we do goes towards that institute, founded by our founder, Jim Stowers. But what's awesome about that is we now have about 25 trials that we are deploying a new cure for, hope to find a new cure for, and the trials are beginning. The connection between Stowers Institute and our president, which they've been on the phone with, Dr. Chow from Stowers Institute, and some of these doctors have built a relationship together already to begin work on these trials together. So talk about adding value. Forget about the target date funds for a second. Bill had just cemented himself not as the advisor, as I said before, but as truly a partner who understands the business, what matters to them, and is connecting them with the right people in the industry. So, Bill, thank you for that. I want to turn it over to Brad now. And Brad, get your thoughts and comments on some of what you just heard.
Yeah, absolutely. So let me start out by saying, let's not forget about the target date funds, because one of the things I think that can differentiate you all as an advisor, and I know this is something that is common, but the way you approach it is what can be the differentiator, is acknowledging the importance of target date funds and other qualified default investment alternatives in automatic enrollment and automatic escalation, and using those in that way. But what I think a lot of fiduciaries don't appreciate, unless the advisor's effective at pointing this out, is that not only is that a tremendously important plan decision, because you're, as a settler matter, you're helping make sure this plan's actually going to provide for retirement. You have much better outcomes, more people participating, more savings going into the plan, more contributions to the plan with those structures. But there's also a fiduciary risk element here, which is, how did you select the target date fund you did? Can you show your work? Did you look at the right things? And let's remember, if QDIA is used as it should be, chances are, some large proportion, 60 to 80% of the fund's assets are going, of the plan's assets are going to be going into that selected target date funds. So it really is probably the most significant menu selection question you face as a fiduciary. And going back to know your customer, not only is that something you're required under various securities regulations to do, but in this context, it's really vitally important, because if you look at the guidance that the Department of Labor has put out on how to select a target date fund, It involves really getting in and looking not just at some of the basics about that plan, but understanding how the participants really live, how they really work, what their savings are, what their incomes are. Is there the availability of other plans like a defined benefit plan? You have to look at all of these demographic factors that are sort of specifically identified by the Labor Department in order to ensure that you've made informed decisions with respect to questions like to versus through. What is the appropriate glide path for this plan? How are these participants actually going to act? When they get near retirement, are they going to start taking the money immediately? What's their ability to tolerate volatility when they're getting to retirement age where they're presumably separating from the plan? Are they in fact separating, or are they remaining as separated vested participants? Or are they rolling over and leaving? These are all issues that you really need to understand in order to properly inform that question about what should our target date fund be. And one of the things I've worked with American Century on is developing the target date blueprint, which is a tool you can use that goes through and helps you identify all those factors and document them. Because one of the rules of ERISA, which is not an official rule, but it ought to be, it's an unofficial rule, is that if you didn't write it down, it didn't happen. So if I haven't got good, strong, contemporaneous documentation of my decision-making, how am I going to show 5 years later, when half the fiduciaries who were there have left the company, that we did the right thing and did it the right way? Because the thing to remember, of course, about being an ERISA fiduciary is your process is what it's all about. We're not here to guarantee the outcome. We're here to guarantee the inputs. We're here to make sure that we're making decisions the right way and documenting those for the protection of the plan fiduciaries who are following your advice, and also for your protection as a fiduciary advisor. And the last thing I'll comment on, because I know we're short on time, is one of the other differentiators you can think about is whether you as the advisor are able to undertake being the 338 for the purpose of selecting the QDIA. Under the QDIA regulation, either the plan fiduciary or a 338 investment advisor needs to make the selection on behalf of the plan. And that can be one of the areas where you can say to the plan, in addition to whether or not they want other 338 services, they might in particular with respect to this question. And obviously that gets into business issues. Some of you are comfortable doing 338, some of you aren't, some of you can't because of your relationship with your financial institution. So that's a very individualized question, but it can be a differentiator to say, not only do I know how to do this, but I'm prepared to do this for you and make this decision on your behalf.
Awesome. Thank you. Dawn, do you want to maybe open it up and see if we have a couple minutes left to see if there's any questions for Bill and for Brad?
And thank you, Shane. Thank you, Brad. Thank you, Bill. For the advisors on the call, you have a Q&A window as well as a chat window. Please feel free to send in questions for Brad and for Bill. And perhaps while you're contemplating doing so, Brad, this is all about resourcing advisors to be more effective in the retirement marketplace. Can you share, there's a complimentary resource that you all offer that's available to advisors? Why don't you tell us about that?
Yeah, we obviously do. One of the things I think that's different about my firm, Faegre Drinker, is that my practice and that of one of my partners, Fred Reath, and several of our colleagues, we really focus on the needs of service providers to plan, of advisors, of record keepers, of product manufacturers. So we really focus on the ERISA as it applies to service providers. And so we do a lot of work with various types of advisors. And one of the things that we do is quarterly, we have a call called Inside the Beltway, which is as creative as our marketing gets, where we talk about what's coming up in, what's happened and what's going to happen in the world of kind of ERISA, and to a lesser extent, but also importantly, some of the securities regulations. So for example, we just did our call for the quarter last month, and we had a lot to talk about because there's been a lot going on. We have the new DOL fiduciary rule. We had the new proposed regulation on ESG investing. We had, the new directives on how you can incorporate some alternative investments into otherwise diversified investments. We have new CARES Act guidance, new-ish, issued in July, CARES Act guidance to deal with some of the implementation issues related to the coronavirus distributions, coronavirus loans not requiring RMDs this year, all of those issues. So yeah, feel free to drop us a line. We'd be happy to put you in. It's free to call. And if you can tolerate listening to us for an hour, feel free to join in.
I'll be on your next call, Brad. We will be sending out, by the way, contact information for those on the call, and I'll be glad to send out the link for that, Brad. That's a wonderful resource. Thanks for making that available to the advisors on the call today.
Sure.
We're going to keep going, but again, feel free to send in questions. Bill is going to remain for the duration of our call. Brad, I believe, has to leave us. But please send in questions. And Bill, we're going to keep you around for Q&A.
Sure. Thank you. Thank you, Dawn.
Thank you all very much.
Thank you, Brad. We'll
day.
see you inside the Beltway.
Thank you.
Thank you. Thank you, Shane. And Shane's going to remain with us as well. We're going to move on to our next panel discussion. And thank you for those investment insights, Bill and Shane and Brad. In the spirit of putting together all the components of the retirement plan equation, I have with us today a panel of TPAs and 316 providers. Where we come from at TPA Benchmark, we're all about helping you as an advisor sell more retirement plan business. And that's why we launched this series. And I asked for a couple volunteers from our community of TPA Benchmark members coast to coast, and I had a few folks raise their hands. Included in that group are Dana Broadway. Dana, good morning to you. Dana is the president of PB&H Benefits out in Waco, Texas. We also have Michael Gorlick, who's president of Benefit Equity, both TPAs that are part of our community. And they're going to speak a little bit about how a TPA can add value to your efforts in writing more retirement business. Also pleased to have with me today someone who many of you advisors know, Sue Missick, who's Vice President of NPPG. She is responsible for the fiduciary services component of the firm, also a member of our TPA Benchmark community. She's going to talk a little bit about 316 and how that can complement the fiduciary equation. So let's kick it off with our panel. And Dana and Mike, do we have you there?
Yes.
We do.
Great. I'm going to ask you to lead it off, and we'll bring Sue in behind you. But many of the advisors we have on the phone today are accustomed to working with bundled solutions, right? And maybe they think of the TPA for a complex case situation or an out-of-the-box plan design. Let's chat for a few moments about how a TPA can really help the advisor look like a champion in the compliance realm. And Mike, I'll start off with you. You work with a lot of advisors out there in Southern California. Maybe just kind of differentiate between that bundled TPA model for us a little bit, and talk a little bit about some of the value adds that a TPA overall can add to a smart retirement advisor's efforts.
Sure. Thank you, Dawn. Good morning, everybody. In Southern California, there's a faction of bundled and unbundled, and so we're constantly dealing with, how to show value. And I think that's been our overall mission as a TPA, is to help advisors continue to show their value and be productive with clients when it comes to selling retirement plans. And obviously, there's a time and place, in my opinion, to be bundled, and certainly a time and place to be unbundled. And so in trying to figure that picture out, obviously it's about the client's needs. It's about what's going on with a particular plan sponsor from a complexity of a plan design standpoint. Do they need, and of course, in this discussion, size of the plan becomes a very big deal. A lot of my plans are small. They're under 100 lives. Many even under 100, under 50 lives. And so the smaller you get, the more creative you can be in terms of creating tax advantages for owners or groups of key people. So I think this discussion is really, you have to understand what marketplace you're in. If you're in the large marketplace or the small or somewhere in between, the goals should change. But in general, the TPA is going to be bringing the value to consult with you and the client and the CPAs potentially, the key advisors of the client, to bring the proper solutions so that you're not cookie cutter everything from beginning to end. I think the plan participants will also and have also been given a tremendous opportunity when an advisor and a TPA or a record keeping partner are able to do meetings, employee meetings. There's more to offer from soup to nuts with the proper TPA with the right client base. One of the ways we bring this value is during the annual plan review. I work with hundreds of advisors. I would tell you very few of them have the consistency with conducting the annual plan review. So simply what I do to help kind of facilitate that, the record keepers produce their quarterly plan checkups, right? The John Hancocks of the world and the Voyas and the Nationwides, they all have their quarterly plan checkups, which really is a historical perspective of what just happened in the prior quarter from an investment performance area or a statistical analysis of the participants themselves who joined the plan, who has a loan, where the assets lie with different age bands. So that's very helpful information. What I've figured out over the years was, would it be not better to have some conclusions to bring to that meeting, to the plan, so that there's some actionable items, such as, when is it time to do a benchmarking study? Understanding when funds actually need to be put on a watch list or actually changed out. Again, this now comes down to your 321 fiduciary co-fiduciary coverage, or are you the 338? So there's some dynamics there. But overall, packaging up a very clean review by putting together, I like to do an outline, and I'll just sum up real quickly here, move it along. I create an outline for my advisors, with actual stats, assets, flow, actual ADP results, including all those non-participants, which are not often captured by the record keeper, and then coupled with the quarterly plan checkup, and then in most cases, like an FI 360 report, which helps the advisors draw their conclusions. That, to me, coupled with who's at the meeting, signed, I participated, and here are the actionable items that we have to follow up on. I'll keep it simple and move along from there.
Fantastic. And it's all about building a strong team, right? So the advisor being the expert on the investment management piece, knowing their client, as Bill shared, and then bringing in a really strong TPA that can design an optimal plan, go through the 404C checklist. Dana, before I bring Sue in on the 316, Dana, obviously you work with hundreds of advisors there in your TPA shop. Can you just share with us how you complement advisors from a plan design and compliance perspective?
Well, so I think it goes along with the overall theme that we have presented to the advisors, as far as digging deeper and really understanding the client and understanding their goals. That walks right into plan design and compliance, and understanding understanding the needs of the clients, making sure on an ongoing basis that the plan continues to meet those needs. It's really that consulting piece that you'll get from a third-party administrator, where that TPA, I was on our prep call, said, TPA becomes the advisor's BFF, because we can offer suggestions and we can look at reports and ask questions, or give the advisor questions to ask when we're talking about the sales prospecting, or when we're talking about even the annual review process, because we're able to see things in those reports that maybe the advisor is not going to be able to see. And we're able to alert them of things like, hey, participation looks like it's really gone off. on this plan when we're looking at ADP testing, or hey, they've acquired a new company, and just continuing that relationship and digging deeper to really add that value to the advisor and to the client. I think that's where the third-party administrator sort of in the unbundled environment adds a lot more value, just because we're able to get in there and build that relationship and support the advisors a lot more closely.
Wonderful. Thanks, Dana. I do have a question, and Sue, I'm going to bring you in on this question. One of our attendees is asking, how is everyone dealing with periodic education/enrollment meetings in today's environment? So Sue, I'm going to toss that to you and bring you into the conversation here, Sue Missick.
Sure, thank you, Dawn. So the advisors that I'm working with, they all have Zoom accounts. Or web access. They're still providing service to the retirement plans. They're meeting with their participants. They're taking phone calls. A lot of the vendors, the record keeping vendors, have video enrollment meetings that they can use. So, and Cassie Churchill's on the phone, they have that ability. All of the record keepers have it. So, it's just reinventing who you are and how you're going to communicate with your clients. From the 316 perspective, it's really important that you're documenting all of the administrative things you're doing on, from an advisor standpoint for the plan, so that the plan sponsor has some type of record that you did your enrollment meetings and that you've offered the plan to participants. Because one of the things, if you've ever sat through a IRS or Department of Labor review, one of the things they're going to ask is for proof that you offered the plan to all of your plan participants. And while, the TPAs will tell you, make sure you keep your records until you actually walk through one of those audits, it can be very messy trying to gather the data that you need to give under an audit. I sat with an audit, one of my clients about 3 years ago. They have a lot of turnover, and we had to actually go back and send letters to almost 100 terminated employees to get a certification from them that they were offered the plan, and they actually decided not to take it because the plan sponsor never kept any declination on file that they gave the enrollment kit to the participants. So it can be very messy and costly trying to close those holes up after the fact.
Fantastic, Sue. Hey, Bill, I'm going to bring you in on this conversation. I'd like to get your comments on the virtual education enrollment meetings, how you're handling that. And we have a follow-up question from one of our advisors here that's asking, how do you encourage employees to attend virtual meetings? So, Bill, if you're with us, how are you doing that?
So, yeah, I mean, we've even prior to what's been going on, we've tried to do most of our meetings virtually. And the meetings, fall on two levels. One is the fiduciary level meetings, right? So those are just with the fiduciaries, but the participant level, we work closely with the client. And again, back to what I was talking about before, which is really know your client, know the demographics, understand, where the employees are, where they're located, and their access to technology, at different times of the day. And so we really lean on the client to tell us what's the best time to do that, and what's the best way to do that. And it's been a great dialogue between them, and they'll let us know, and then we'll put it out there, those meetings, and then of course we record them and make them available afterwards, so if anyone wants to look at it on their own time, it's available as well.
That's a great point, Bill. That's a great point. And your thoughts on, Bill, building a strong team of experts to kind of come in and, really give the plan sponsor your A game. Your thoughts on that?
I mean, yeah, that's kind of been our mantra our whole career. We love to look towards a lot of the our partners, our business partners, like American Century, like Liam at Franklin, the people that are on the call they could think of. But in addition to that, the TPAs. We have some, the TPAs add a tremendous amount of value to for our clients. So we have this. I want to say a go-to committee, but most of them are outside vendors that we can go to. So when we talk to the clients and understand what their needs are, we can then reach out to our partners, whether it's a TPA, whether it's a vendor, whether it's a fund family, whether it's someone like Brad, an attorney. We have because I've been doing this for so long, we have great relationships here where we can go to them and ask, and in many cases they'll be retained by the client. In some cases they're not, and the same. And those people rely on us also. That it goes two ways. They'll come to us if a client has some questions about what they're really looking for in an advisor, and what things they need and don't need. So
fantastic. Well, keep the questions coming. I'm going to keep our panel on the phone. We're going to move to our next section because we're going to keep this going on time, folks, and have you 12:15 having lunch or breakfast if you're on the West Coast. So I just want to emphasize the value a high quality TPA can bring to your game, the value of a 316. We're going to send out contact information. Specifically, contact us here at TPA Benchmark if you don't have a good bench of TPA partners. We've got great folks all across the country. By the way, they are non-producing TPAs that we work with. So they are not going to be in competition with you, and we would be happy to get you connected with them. I'm going to bring in Carlos Tariche, and we're going to keep the questions flowing, Carlos, so let's keep it fluid. But I kind of want to talk a moment about giving advisors a few pointers where they can maybe get some more business in this year. And cash balance has been a recurring theme. We'll keep our TPAs on here too. But cash balance has been a recurring theme where, there are many industries that are prospering in this environment that are looking to shelter income. I just want to emphasize this for advisors that maybe are solely doing DC, not to overlook the cash balance opportunity because they can make more money this year. So Carlos, just give me your perspective. And for those that don't know Carlos, I assume everyone does. He's regional sales director for Kravitz. They write cash balance plans day in and day out. Carlos, what are you seeing post-pandemic with cash balance activity? Is it strong? Is it stronger in comparison to past years? And what kind of activity are you seeing? Can you give us a little market perspective?
Sure. So I don't think that there's many cash balance professionals out there who will tell you that this is not a challenging time in cash balance sales business. It's, there's lots of companies out there that are literally fighting for their lives. But that being said, there are pockets of companies that are doing well, that are profitable. I think Steve Puckett had mentioned in a prior webinar that there are winners and losers in every type of situation. And there are companies out there that are doing well. It's almost like picking stocks. When you're out there prospecting cash balance opportunities, you're looking for those companies that are thriving in this economic downturn. In good times and in bad, we're looking for companies with steady and even increasing profits. We're looking for companies that can make that commitment that is required on the cash balance side. So it's a challenging demographic out there, but we've been focusing on the companies that are doing well despite what's going on.
And Carlos, what companies are doing well despite what's going on? Where are you seeing, what are the sweet spots for advisors to be thinking about where they could maybe rack up some cash balance sales before year end?
Yeah, so, certain high-end real estate professionals are doing really well during this economic downturn as the mass exodus from these large cities is taking place. And we've written several plans with high-end real estate professionals that are doing really well. Wholesale medical supply companies are doing very well, and we've written several plans for those types of companies. Even now, medical professionals, Dawn, we're starting to see, as they're starting to do elective surgeries again, they're kind of dropping back into that category of companies that are looking for large tax deductible contributions. We did a plan for an infectious disease professional who, as you can imagine, is got more business than he knows what to do with. And we've done several ambulatory and urgent care centers. So they kind of come in all sizes and shapes. It doesn't really matter what type of company it is, whether it's an S Corp or a partnership or a sole proprietor. You know, the deductions come in different levels depending on the type of company, but really it works well, cash balance, for whatever type of entity you have.
And again, Carlos, I mean, I've heard this a number of times, but you know, just refresh us. So an ideal candidate, other than looking at those industries that are prospering, would be an owner with what type of income threshold? What would be the trigger point for a cash balance discussion for owners?
So we're looking for high net worth owners, partners, or shareholders, at least $285,000 in compensation, which is the IRS limit for 2020. So we're looking for high net worth individuals, looking for deductions, looking to catch up on retirement plan savings. You know, cash balance fits really well for that business owner who may be cash rich or company rich, but retirement plan poor and maybe hasn't done a great job of saving. At Kravitz, we like to say a cash balance plan is a great way to get 10 years of retirement plan contributions into a qualified plan in 5 years.
Fantastic. I'm going to take a step back because talking with advisors, obviously there's the cash balance opportunity. Let's talk for a moment about referral sources for those opportunities. So obviously CPAs can refer advisors a lot of business, and they're a key partner. There's one thing that you do, Carlos, we talked about it with our TPA group, but it's a CE credit CPA course that advisors can use to grow their CPA base. Can you just reference that for us? Because I think it's a great opportunity for advisors to build their referral network.
Yeah, I mean, the CPA is such a key referral source, Dawn, in the cash balance universe. Really, I like to say that that CPA has a front row seat to the profitability of the company, and his responsibility is to find tax efficient solutions for the clients. So any you know, situation when we can partner with an advisor to help them refresh those CPA relationships they may have is a great opportunity. We've been doing now for probably 4 or 5 years a full education on cash balance. We call it Cash Balance 101, and it's designed specifically for CPAs. In fact, I'm doing one tomorrow, a virtual event tomorrow. And really, it's a full education on cash balance plans. And we find that the CPAs, their knowledge on cash balance is a little bit all over the map. You know, there are advisors out there mostly, or CPAs out there mostly from larger firms who have some experience on the cash balance side, but more often than not, especially for the smaller CPA, you know, they haven't heard cash balance. They may have some experience with traditional defined benefit plans, but they don't really know much about cash balance. So we partner with the advisor. It's really easy for the advisor. All we ask him to do is to fill the room, or fill the virtual room in the world we live in today. And we'll do everything else. We'll make a 55-minute presentation. We'll bring the materials. We'll issue the CE certificates. As a matter of fact, usually the way we do it is we'll issue the CE certificates back to the advisor. So the advisor has the opportunity to be able to follow up with the attendees and perhaps cross-sell some of the other services, whether it's wealth management or insurance or whatever it is they're selling. So we've had a lot of success. Those CPAs become valuable referral sources. You know, it's tough to crack a CPA, but once you gain the trust, they become referral sources for life. And I've had a couple of different situations, Dawn, where not only does the CPA become a referral source, but the cash balance concept works specifically for that CPA firm. So we write a cash balance plan for that firm. And then, you know, those are the dream opportunities where we sell the cash balance plan to the CPA and they become a referral source to us forever. So it's really an exciting program. We've had hundreds of advisors take part over the years, and if you're interested, it's something I'd be happy to speak to you about.
Wonderful. And that can all be done in partnership with the local TPA. I'm going to bring in, just real quickly, you know, Bill, and actually I got Steve Puckett, who I think you mentioned, Carlos,
Yeah.
on the line here. And I think I clicked your ability to speak, Steve. I'm curious what you're seeing, Bill and Steve, in the cash balance arena. How would you categorize that opportunity for the advisors on the call? What are you guys seeing?
I mean, this is Bill. The situation I'd spoken about earlier with the doctor's practice.
Yes.
Yeah, that they basically, the way that company was formed is they acquired a bunch of other doctor's practice that rolled into one. So we worked with a local TPA and created a plan that was a 401k profit sharing and a cash balance, right? Because the physicians, to Carlos's point, your physicians are great candidates for cash balance plan because they're looking for opportunities to save more money, right? The tax benefit of sheltering that in the cash balance plan. So we've had some success there, as well as we had a law firm that we're talking to right now as well with that's interested in a cash balance plan. So it's a conversation we have, you know, on the front end of all of our clients, we talked about plan design, right? It goes back to know your client. What are you trying to accomplish? Where do you want to go? We'll talk about, you know, who the best platform is, or what the best vendor is, or what the best funds are, funds, fees, fiduciary. But it really goes down to know your client and what they are trying to accomplish with this plan. I've always said this, 90% of the success of a retirement plan for a company is plan design, right? All the other stuff is table stakes. Picking funds is table stakes. Everyone can pick funds, right? Everyone can, that's the easy thing to do. But plan design, if you're not right on the front end, it gets ugly pretty quickly.
Fantastic. Fantastic.
Yeah, and this is Steve Puckett. I agree. Again, many times we lead in with, you know, defined benefit carve-outs, DBDC, non-qualified deferred compensation. Again, you want to find out more before you go down the path, because again, finding out what they need. The solution may end up be cash balance. It might be a DBDC carve-out. It might be an offset plan. Might be a deferred compensation arrangement. But certainly the best way right now is there's a lot of winners in this this environment that are looking to shelter money. And again, there's many ways of doing it.
Fantastic. Thanks, Steve. I'm going to just, again, encourage you to just build a network of specialists that you can refer to, right, Bill, to kind of draw into this equation. I'm going to wrap this session up. We're going to bring in our next panel, but I do have another question. I'm going to toss it to Sue Missick. An advisor is asking, in this environment, again, he just wants to understand how the group is dealing with encouraging employees to actually attend these virtual meetings. So Sue, you had some really good thoughts on that. Could you share that with the group?
Sure. So what I see some advisors doing is when they're doing their promotion of their enrollment meeting or their trustee meeting, they're saying, you know, there'll be a raffle held, you know, give away a $25 gift card to Panera or something, you know. The other thing is, you know, ordering lunch, you know, that my TPA counterparts all kind of know. I do this little lunch thing where I Grubhub lunch to an advisor and I have lunch with an advisor virtually. You know, that's another opportunity I've seen one of my advisors do is, you know, order everybody a pizza and send it home. So that, you know, it gets them engaged in wanting to be on the call with you. But you have to have buy-in from the plan sponsor, and the plan sponsor has to make the meeting important for the employees. So, you know, without the plan sponsor really promoting it and almost requiring the attendance, it can get a little tough to get people to actually dial in or get on the Zoom and things like that. But there's definitely ways to do it, kind of thinking outside the box, and encouraging people to come into the meeting.
Sue, thank you so much. Carlos, thank you for your insights. Carlos Tariche from Kravitz. We're going to keep it moving along. We're going to bring in Liam Grubb now and our concluding panel here, which consists of Donny Sheinwald, who's a regional sales director with Lincoln Financial. His tag team partner is Cassandra Churchill. And interestingly, consistent with this conversation, Cassandra runs the business development efforts for TPAs. We also have Rob Ruggiero, who's a sales director with Paylocity. And of course, Liam Grubb, who is vice president of Franklin Templeton. And I thought it'd be interesting to have a panel of investment managers, payroll providers, and product providers on the phone. We're covering the full spectrum. We talked about investment management. We talked about compliance, plan design. Let's talk about, Liam, how we can leverage these other components of the retirement equation to help the advisors on the phone today.
Dawn, thank you so much. And thank you again for including us. Really, really grateful to be a part of today. And thank you everyone on the line for your attention. Before we dive into some of the questions and, hear from Donny, Rob, and Cassandra, I did just want to, mention again, work for Franklin Templeton. We've been in the news a lot recently. As of last Friday, we actually completed our acquisition of Legg Mason. So I'm really excited to announce if anyone, does any business with Legg Mason, from the New York to Maine area, I'm your new contact going forward. I previously just covered the Mid-Atlantic as well at Franklin Templeton, but my colleague Nancy Tassiello will represent Legg and Franklin in that region. And going forward, even though we do have access to all of Legg Mason's products, our new combined entity will be known as Franklin Templeton until we figure out the branding going forward. But really excited about today. Figure we could start by setting the stage, and we'll go in alphabetical order. I'll ask each of these questions, and Donny, if you can respond first, and then Rob, if you can come in, that would be great. But let's set the stage with some market perspectives. Each of us work across different market segments with advisors out there. Can you both give us some of your perspective, share what you're seeing out there with advisors in this environment, particularly in terms of sales activity and appetite for new retirement plan business going forward?
All right, so you had asked me first, right, Liam?
Oh, yes, please, Donny.
All right, so first of all, Dawn, thanks for having me on. And I don't think I've ever seen a panel that had 20% Hofstra graduates, so that's pretty cool right there. I'd also like to say I'm with Lincoln Financial. We are a record keeper. And just to shift to the where the market is, I will tell you that if you asked me this question 3 months ago, I would tell you that the tires fell off and the world was coming to an end. What I've actually seen is a shift in attitude. And what I mean is 3 months ago when the market was, tail spinning down, advisors were very concerned about keeping their clients, making sure that their clients were taken care of, whether it was in their accounts, whether it was just talking to them all the time. So my calls with advisors were really about how's everyone feeling, how's your family, what's going on in your area, that kind of thing. Where now, what I've seen is a tremendous uptick in not only proposals, but sales. As a matter of fact, knock on wood, I'm having my best year this year because in the last 2 months, I cannot believe the amount of activity that's come across. We've all seen the retirement plan world shrink in terms of advisors doing the business. I think it's even shrunk more now because advisors that were trying to keep their toes in the water are now focused back on their personal business and trying to maintain their client base. But what I've seen is the few advisors that are actually focused on this business, the opportunity is out there. And it's shocking to me that after 2008, how many plan sponsors still have not heard from their advisors, given what they heard 12 years ago and what they're going through today. Back to you, Liam.
Excellent, Donny. Thank you so much. Couldn't agree with you more, actually, too, with how things have changed and how it seems like everyone has moved back into sales mode. So, Rob, from the payroll side of things, you're really interested to hear what you're seeing.
Yeah, thanks, Liam. And yes, I'm a fellow Hofstra alumni. Donny pointing that out. Didn't realize that Dawn was as well. Found that out.
100%.
So that's awesome. So yes, from a prospect perspective and from the payroll world, the human capital management world. What we see out there today is our sales reps are very active in the market. They have very high metrics to meet out there. And what we see is a lot of small businesses that have grown, increased employee size and increased participation in their plans. And as a small business, they like a turnkey operation. So they go to the ADPs or the Paychecks for that turnkey. But what we've found is that they no longer get the guidance and a trusted advisor to speak to on those plans. So we find that a lot out there. And, the reps that have the relationships with the advisors, they bring them in. And, we could spark some activity for a lot of advisors out there because we come across them every day. And some of the things that, like Shane was talking about earlier about differentiating and, knowing your client, it seems to be the common theme. And that's what, we bring to the table there, because we just don't want to be a vendor to these prospects out there. We want to be a trusted partner, and in turn, we want to bring in a trusted partner. And that's why we've formed so many of these great relationships out there in the marketplace.
That's great, Rob. And, listen, Rob and Donny work for two great organizations. I like to think Franklin Templeton is as well. Great brand names, but I'm sure the two of you would agree, we're not getting business off the names of our firms alone, right? I like to say that in what we do, we have to earn the right to compete for business. And oftentimes that's offering some tools and value-added resources that, the advisors out there can leverage to help them in their practices. So, starting with Donny, would love to hear, what Lincoln's providing at this time in terms of value-added resource, and anything too in particular that you found very, very successful in this new remote virtual environment that we're in.
No, that's a great question. Lincoln actually subscribes to a couple of services, and I know many of us have heard the names of Judy Diamond and Brightscope. I will tell you that we do have an upgraded service for Brightscope called Brightscope Beacon, which many of you have probably heard of, many of you probably have not. But what it allows me to do is it allows me to find specific plans that are either expensive, or they don't have an advisor, or they have a record keeper that may not be as current technology-wise as others. But what it allows me to do is it allows me to go to work for the advisor to help them find opportunities, when they tell me what they're looking for or who their connections are. So, for example, if I have an advisor that says, hey, listen, I have a lot of connections in the construction space, I can literally find construction companies in a certain range that don't have an advisor on it, and they can call out to those. So the Brightscope Beacon has been a tremendous tool for advisors that come to me and want help prospecting. Judy Diamond is just a great door opener, but it's not going to help you close the business. I feel like the Brightscope Beacon is a tremendous report that will help you to have conversations, deeper conversations with plan sponsors.
That's awesome, Donny. Rob, how about Paylocity?
Yeah, sure. I think, 3-4 months ago, at the beginning of this pandemic, there's not a prospect out there that would take a phone call. Let's face it. They're like, are you kidding me? You're calling me, and it would be, the sales reps would almost feel very bad about calling into a prospect. So what's mentioned on the phone is, how do we differentiate and how do we not sound the same? So what we're doing at Paylocity is we use what we call VidGrid, and it's called video messaging through email. And it really is a differentiator out there in gaining access to prospects that are just tired of getting an email or a phone call. Earlier in the pandemic, the phone call right now is still working, by the way. I mean, nothing beats picking up the phone, but you have to make a lot of dials. But however, the video technology seems to be a game changer for us. It's a more personalized message. You can basically pinpoint the things that we're doing different in this remote work environment. We're teaching prospective customers how to use Zoom. Before meetings, we're giving detailed instruction on how to use it. And we're really preparing our prospective clients for this type of environment. So, you know, the VidGrid and all the other tools that we have available at Paylocity, like Zoom Info, which is a great tool which helps sales reps identify what prospects are looking for a HCM application and even a 401k plan. That's how we help our partners.
That's awesome, Rob. And, you know, especially in this environment, some of that Zoom Info thing sounds really, really useful. You might get an email from me later on to sharpen my skills on that. You know, if I could just chime in real quick, Dawn, too. You know, listen, at Franklin Templeton Legg Mason, we have, you know, just a really abundant amount of resources. And I have the privilege in my role to work with some of the elite advisor consultants, you know, the Bill Peragines and the Steve Pucketts of the industry, but also those who are new or just in the business. So some of these tools really kind of fit all that breadth of service. But, you know, put it eloquently earlier, the fees, funds, fiduciary type of tools, your FI 360s, your MPIs, and your plan sponsor industry benchmarks, you know, all of that, please feel free to leverage you know, a Franklin Templeton or maybe even American Century, you know, that Shane works at too. You know, a lot of us have access to all of these tools. Prospecting tools, such as Brightscope that Donny mentioned, probably the most powerful one that we have. But something we do a lot of, and especially in this environment, is event marketing support. You know, we've got a lot of great presentations, many of which are CE eligible, you know, for your plan sponsors, your HRCI and your SHRM designated professionals, and also CPAs. You know, I know that Carlos mentioned earlier, you know, these CPAs are hard to work with sometimes, but if you get a great relationship there, you know, that can be really, really fortuitous. And we have a lot of presentations that are CE eligible for CPAs as well. And lastly, we can deliver these in conjunction with advisors or on behalf. And I'd just like to mention, too, we've got two very, very impressive national spokespeople who can deliver these presentations as well, ranging in topics from, you know, maximizing Social Security for your clients to even some practice management themes like the psychology of referrals. So if you and your team want to, you know, sharpen your sales skill in an environment like this, a really wide range of topics that we cover. So we've got about 5 minutes left. Figured land the plane. Donny and Rob, at the end of the day, you know, this event today, not to speak for Dawn, but I know it's about building business. So just, you know, some closing thoughts on how your respective teams can partner with advisors and at the end of the day, help them sell more retirement business during this environment.
So again, only because I went first before, I'm going to tell you right now that I think the theme is that we're open for business. And I think, again, it's a shift in attitude. It's a shift in sales tactics from defensive to offensive. And I'm going to tell you that on the Lincoln side, whether it's myself or my Long Island, New York counterparts, you know, we're all working harder now. I think many of us would agree there's no boundaries anymore. You can't say I'm out of the office because your office is your home. So there's no boundaries. I find myself working harder today than I did 4 or 5 months ago. But I'm going to tell you that business is being closed. We are closing business. And we're being very strategic about it. You know, everyone mentioned earlier, I don't want to repeat everyone, but, you know, knowing your client is the same type of thing as me knowing my advisor, knowing who their circle is, who their center of influence is, and working and feeding off that, helping them to grow their business. So, you know, I would suggest that, you know, if you're interested in growing your business, reach out to any one of us, and we're more than happy to share our ideas with you. Some of them will work for you, some of them won't, but you'll pick and choose.
Mm-hmm. Yeah.
That's awesome. Rob, you want to take us home? Thanks, Donny.
Sure. Real quickly, you know, it's never been a better time in my industry right now to evaluate a partner. Companies were not prepared for this remote work environment and still are not prepared. And they're not prepared for the next wave, if there is one. And a lot of companies are scrambling right now to get prepared and what solution is going to be the best for them. And, you know, the partnership what it means to you is the technology of a company like Paylocity that can help with the 360 integration on a lot of the 401k platforms out there. Most companies want to take that manual work off their plate and get with a company that could offer that type of integration to streamline the process. So at the end of the day, you know what? It's never been a better time to evaluate and look for a partner, not a vendor. So I'll close it out with that. Thank you.
Thanks so much, guys. We'll kick it back to Dawn to close us out.
Great. Great panel. Thank you, Liam. Thank you, Donny, Rob, and Cassandra. Fantastic insights. I want to thank all our participants today. I think we've laid out a tremendous buffet of really partners that are eager to come alongside you as an advisor and help you be more successful. 5 months left in the year, lots of time to hit it really hard and make progress. So we're available to assist you. Before the day is out, you'll have an email from us with contact information for those on the line. We'll have the YouTube video posted. Again, those attending today, either in person or watching the video due to extenuating circumstances, will receive CE credit. And on behalf of TPA Benchmark, we thank you from our network of TPAs across the country, and we're looking forward to partnering with you on the phone. September 1st, our next event will be featuring Ellen Lander, will be our featured guest from Renaissance Benefit Advisors, and we'll have another great group of teammates joining us. So thank you all for your time. Have a wonderful day.